Good morning, traders. It's 8 a.m. Chicago time on Tuesday, the 7th of June, 2022. This is episode number 2248, 2248. Thanks for joining me yet again today, over and over and over. Really appreciate it. Love the company. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's hop on over to the Convergent Trading pre-market summary sheet. Again, you can get this every morning by following Convergent Trading at Twitter. On Twitter, you can find them at twitter.com/conv trading, as shown in the bottom right corner of your screen there. This comes out at about 8:50 Eastern, 8:50 or 8:55 Eastern. The risk posture overnight is a mild risk off. We are actually against a very, very key area here in the S&P. We are challenging the 72 to 74 area. This is a pretty significant edge of balance down here. We went to 78 in the overnight session. So the RBA came out, the Reserve Bank of Australia came out with a forecast or expectation for rates to go up to 60 basis points from 35. So people expected a 25 basis point hike from the Reserve Bank of Australia. They actually hiked 50 basis points. And that was a shock to the market. So now the rate at the RBA is 85 basis points. Also, factory orders out of Germany came in very poor. They were expected at plus 1.5%, came in at negative 2.7%, giving it a swing down of 4.2% to the downside from expectations. Balanced trade for Canada also came out, expected at 2.8 billion plus. Canadian came in at 1.5. That missed. Balance of trade out of the U.S. also came out at the same time at 8:30 a.m. Was expected at a deficit of 91 billion. Came in at a deficit of 87.1 billion, which is better. We did get the exports and imports number. They're insignificant. And then for the rest of the day, we have the Canadian IVPMI. For May, we have the API crude oil stock change after the close. And we'll get GDP from Japan this evening, as well as the NAB business confidence for May. That's a significant number for Australia. The expectation there is 12. Looking at the rest of the week, which I didn't do yesterday, every Monday I go through the week and look at what the high tier numbers are. The rest of the week, tomorrow, we get the only significant number we have is the balance of trade for May for China, expected at plus 50 billion. The ECB gives us its rate decision on Thursday. The forecast is of an increase of 0%, but more and more, there's an argument for a surprise 25 basis point ECB hike. That'll be at 7:45 a.m. on Thursday, a.m. Eastern on Thursday. We get the inflation rate year on year out of China at 9:30 p.m. on Thursday. And then on Friday is the big day for the U.S. Friday, we get U.S. core inflation year on year expected to cool off from 6.2 to 6%. This number is quite significant. And then the following week, Wednesday, I believe, we get the Fed rate decision for the next meeting. The expectation is for a 50 basis point hike there. Yeah, the FOMC is expected at 2 p.m. Wednesday, the 15th. And that'll be the next key significant number. But just remember, Friday CPI at 8:30 is expected to be a mover. Looking across the board, you can see that the NASDAQ is leading us down with the numbers out of Out of Germany, Europe is quite weak this morning, especially the DAX down 1.26%. The Euro Stoxx 50 down 1.38%. NASDAQ 1.32%. Then comes the S&P down almost 1%, or currently trading about 41 points below yesterday's settlement. We have basically left yesterday's settlement behind. Looking in the middle box here at the ES overnight status, we see that we've traded 257,000 contracts. That is approaching the high end of what is normal. It's relatively pretty active overnight session. The inventory is 95% short. 95% short, meaning 95% of the volume traded occurred below the prior close. We have 46 points of range, and if you look at the bottom here, you'll see that 48 is the edge of what we would consider to be normal. The point of control is shifted to 4102, which is below the 4107, the key 4107 from yesterday. By the way, watch that 4107 on any retracements this morning. The low at 4078, and we have a key area between 4074 and 4071 this morning. So we are pushing on the edge today. We want to see this morning if the ES will push down. And just 1 second, let me turn this off. Just switching screens. Okay, here's what I wanted to show. So yesterday, I highlighted this in the Head Trader channel on Convergent Trading. You should see those notes from last night and this morning. Yesterday, if I expand this a little bit so these letters aren't all messed up. Yesterday, we ended up with this double TPO low at 4107 quarter. 07 quarter. The target yesterday was 4107 on scenario 2. Scenario 2 was on point yesterday at the high and the low. But if you recall, I talked about 4110. 4110 being a key defense area where we saw a couple of bounces, and then we pulled back to the mid. I'll show you that in a bit. And then I started targeting from 4118, 4119 to 4107. I think the trade I posted was 4117 short. Looking for 4107, it just stubbornly held 4107 quarter. But what's to remember here is this is a double TPO low, a weakish low, and we are below it. We are down here where this white line is right now. So any push, any responsive buying from here, we're going to have to lean on and check for what it does at 4097, but more importantly, I want to see what it does at the 4107. This is expected to be pretty good resistance area. And then if you look to the left here from last week, we have a double bottom basically at 71.72 and some change. And then below here, if we break below here, we want to see if this becomes resistance. If it does become resistance, then we're looking for a short somewhere in the area, and that is expected to target 40.47 down below. Okay, so that gives us about 25 points or so below there. From where we are now, the response could be 25 points up or 27 points up from where we are currently to the key resistance, this double TPO low or double bottom that held from yesterday. So very, very interesting. The point being, there are some really interesting structures this morning to look at and trade off of. We're not opening in balance or in range. We're opening in balance of the MC point of control, and I'll show you that in a minute here. So we're opening, come on. Yeah. So we are opening imbalance. See, look at this beautiful box area here. And that goes to, actually, that's incorrect. The area in question really is right there. That's the box. This is the box that that really needs to be watched. You can see the double bottom right in here, right there, right there. And then what happened was 4168, is it? Let me look at my notes from yesterday, 4168. So the 68 up above. The 68 was tested multiple times. 68, 68, test above 68. We closed into the 68 last Thursday. We tested the 68 yesterday or the day before. And we have consistently come off of that area. Yesterday, the high was 68. We've come off of this area. So 68, major area to outline. We have that set as our key over-under stock zone this morning. And we have down here the 74 as our key magnet this morning, and the market kind of walked to it in the overnight session. It wasn't anywhere near it when I put that line up. But we are in the bigger picture balance. Look at how balanced this is. And now we're at the low volume node. The extreme of this balance is right here, folks. 7150 is the figure. So we're opening in balance in this big balance, but we're not opening in balance of yesterday. So the market's out of balance versus yesterday, still trading in a balance zone on the extreme of the balance zone. So it's really, 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 did I say really important to watch how it responds this morning into that 70. It's really a murky area between about 74 and 71. How it responds down here is going to be very, very important. If it breaks through, pokes through, comes back, pulls back into that 74 to 71 area and starts to turn up, then what we have is a test much like we saw up here, much like we saw up here, up here, up here, up here. It's a test that is likely to bring us back to 41.17, 41.1720 from here, which is approximately 50 points. So if we test below, come back and hold, and then start to push up, you'll want, write this down in your plan. You want to be long, and you want it to get through the 4107, and you're really looking for 4117, 4120. If it breaks through, so let's put that line here. If it breaks through, comes back, pokes through, and then it's just not able to hold this price and starts to move lower, then we're looking for the short. Okay, we're looking for the short into 4047 to 4047. But look at what we have here. We have really a thin zone into the 4,000, really into the 3980. This thing is likely to float down pretty easily. Why? Because this was a poor structured rally on the way up. We had a gap and so on that we filled in later, but this is this area here does not have very much volume to help it hold. So really important to watch for that. Really important to watch for that. And then the first real support is way down here in the 39 into the 4,000. You can see that high right there, the RTH high at 39.98 or so. That becomes the next key area of support. Now we're expecting around 70 points of range from our summary sheet right there. If you look at the S&P, right in this area right here, if you look at the S&P, then you'll notice that it says 71. So figure wherever it is, look for 71 points, and that becomes your extended target. Okay, a lot to keep in account, and I know it sounds very complicated. It is not. It really isn't. You just need to be very aware of what price is doing. A quick review of yesterday. Yesterday, I expected it to drop into 35.31. 35.31 for the bounce. 41.35.31 for the bounce. That didn't happen. The secondary scenario is a push into 65.70, fail back to where it opened, hold the overnight point of control, and then push to where? 41.07. So from 65.70 to 41.07 is what was expected. This was spot on. The high yesterday was 68.25. The low yesterday was 41.07.25. Scenario 2 is bearish, and the expectation is, given how it traded, the expectation is it would finish somewhere in the middle, which it did, but then it would start carrying more weight to the downside. As you can see, we had this over-under line down here, which is now switched to the top. The bias is to the short side. Looking at other pieces, again, we looked at the TPO picture. We've been in balance for several days. Here, let's look at the TPO chart. So we've been in balance for several days here, and it looks like we are breaking to the downside since the current price is down here. So you can see we're pushing against the extreme. We're pushing against the top of the bottom of the gap zone that we filled earlier. And this really looks like it may flush to the downside. So pay attention there. I'm not trying to color your bias too much. It really is a function. I want to remind you, it's not that you have a level. It's how the market responds to that level that matters. It's not that you have a level or that it broke a level. It is how you respond. It responds to the level that matters. There may be some trades that take place right off the open today. Right off the open today, the volume's pretty good. The range is decent. Expect some pretty active trading this morning. I've laid out my plan for you. That's all I have to say. A quick trade wisdom segment here that I wanted to share with you yesterday. If you recall, I talked about wanting to share some trade wisdom. Really, I want to make this very, very brief. If you cannot explain what you're doing as a trader, what your process is, what you're looking for, and how you're preparing, if you can't explain how that works, then you're not an expert. You need to really get to a point where you can cleanly and clearly explain what you're doing. So the only way to become an expert in the subject matter is to be able to explain it. And if you're incapable of explaining it, then you really don't understand what you're doing. Why does this matter? It matters because if you don't understand what you're doing, it means that at the time when you need to be most confident, you will find that your confidence escapes you, and you're not able to hang on to the trades you need to hang on to, or you're not able to trade with detachment from outcomes. You're not able to trade with detachment from outcomes. So it's significantly important. It's significantly important that you are able to explain it. So if you cannot explain something in simple terms and distilling it to its basic parts and really explaining it very, very simply, then you don't really get it. And then when you need to have the most confidence, you'll find that your confidence fails you. You're letting go of trades, and then you're smacking your forehead because you did something you shouldn't have done. As a trader, this is a problem for everybody. So make sure you understand and are accounting for exactly what you need to do. Good luck today, and I'll catch you tomorrow morning. Convergent traders, we have our monthly AMA today. Make sure you submit your questions before 12:30 Eastern. Good luck.